Hey traders, welcome back to the channel. It is Thursday, December 18th. Hope you all had a good day, had some winning trades today. Without further ado, let's get into it. So the big news of the day, obviously, as you know, if you're following the markets, we saw a nice reversal today because after yesterday's pretty brutal tech sell-off, the NASDAQ actually ripped 1.4% higher today on cooler than expected inflation data, and we got a really good Micron earnings report, so that helped things out. Let's break down what happened and what it means between now and the end of the year. Here's how we closed. So today, at the close, NASDAQ was up 1.4%, S&P 500 was up 0.8%, Dow was up 0.2%, and the catalyst, as I said, was this morning's CPI report. So inflation came in at 2.7% year over year, and economists expected 3.1%. Core CPI was 2.6, well below the 3% estimate. That is actually the lowest core reading since March of 2021. But here's the catch. October's data wasn't collected due to the government shutdown, so this report has a bit of an asterisk beside it. The BLS couldn't calculate monthly changes for most categories, and so economists are basically saying, take this report with a grain of salt. Since the data is messy and it might not reflect true inflation trends. So that's why, although it was still an up day and, overall we closed positive, you still saw a lot of wild up and down swings when you look at the charts, the way that they played out today. The overall big picture takeaway from this is that the markets didn't really worry about the asterisk because cool CPI means more room for Fed rate cuts in 2026, and that sent tech stocks higher today. So as I said at the beginning of the report, the other big catalyst was Micron's earnings. After yesterday's close, the stock surged 10% today. And here's why it matters. Micron supplies memory chips for NVIDIA's AI systems. They reported strong results and said their 2026 production is already 100% allocated. That's a direct signal that AI demand is real and sustainable. Exactly what the market needed to hear after yesterday's concerns about the financing of AI stocks. So NVIDIA bounced 1.9% today. Broadcom was up 1.2%. And the entire semiconductor sector rallied pretty hard after getting crushed yesterday. So the message here is that AI infrastructure spending isn't slowing down. It's just getting scrutinized a little more carefully. But not everything rallied today. Energy was the worst performing sector, down 0.9%. Oil gave back yesterday's gains as concerned about global demand returned. The Dow only gained 0.2% because it's less tech heavy. Old economy stocks didn't really participate in today's rally. This was mainly a tech and growth stock bounce today. Oracle, which triggered yesterday's sell-off, stayed under pressure. The financing concerns around highly leveraged AI plays haven't disappeared. They're just taking a backseat to the positive inflation data. Tomorrow we'll get the final University of Michigan Consumer Sentiment Report. Next week is obviously light on catalysts before Christmas, with markets closing early on the 24th. And honestly, I think a lot of institutional traders probably aren't even going to be working next week. So I expect trading to be very light next week. So then that takes us back to the key question. Is this CPI number real, or is it distorted by the shutdown? And honestly, we won't really know until the December CPI, which comes out in mid-January. That means the rally could have legs into the year end, or it could reverse quickly if traders do decide that the data is unreliable. So for now, the path of least resistance is higher. We broke yesterday's lows and bounced pretty hard. So tech is back, and the Santa Claus rally might finally be showing up. But as I've said the last couple of days, be very, very careful because things can have wild up and down swings, and just when you think that a trend has been firmly established, it'll just fall through the floor, and we're back to where we started a day earlier. So definitely don't get wrapped up in thinking that a big bounce is here just because you see a couple of up candles. So the takeaways here: don't chase this rally at the highs. Let the pullbacks come to you. Secondly, the December CPI in January will be your next major catalyst for inflation expectations. And third, quality still matters. Companies with strong balance sheets are outperforming leveraged AI plays. So the bottom line, today was a relief rally driven by inflation data that might not be reliable. So be careful. Micron did confirm that AI demand is still strong, which helped reverse yesterday's panic. But the financing concerns around Oracle and highly leveraged players have not gone away. We got one more trading day tomorrow and then a shortened week next week. So manage your risk. Don't get caught chasing anything. And I'll see you tomorrow after the close. Take care, everybody.